Do you ever wonder how option sellers like myself are making anywhere from 5 to 10 to even $20,000 a week with the press of a button? Well, in today's episode, I'm going to give you the number one strategy I would use if I was starting as a beginner and I did not know anything. And of course, this strategy is my favorite strategy, the old reliable cash secured put. Hopefully, after this video, I have given you the tools to get started. You're probably not going to be an expert, but you'll at least be able to get started selling options for weekly income. Now, let's get into it. Okay, we are going to get into buying and selling puts, but we're going to focus on selling puts because that is the number one strategy I would learn if I was a beginner in the market. So, looking at our slide, what is a put option, right? Basically, the put option gives a buyer not the obligation, so you don't have to do anything, but it does give you the right to sell 100 shares of a stock at a price that you pick, right? So let's make this a whole lot simple, right? Think of it two ways, right? When you're trading put options, right? You could rather be the buyer or the seller. The seller basically means you collect money. The buyer is, of course, you buy, so you're paying money, right? And of course, we're going to jump into this in the other slides, but let's think of it. Let's give a quick example, right? Let's think of it like they said, insurance, right? If you buy a put, you're buying protection, right? If you have a house, right, you're paying insurance every month, $50 a month, $100 a month, so your house doesn't burn down. You're paying for the protection. If you're the seller, you're the insurance company. You're accepting the risks, right? You are accepting their money, right? Mr. John pays you $50 a month to insure his house, right? So if you're the put seller, you accept the risk. People pay you to take on risk. Okay, before we take a look at this real life example, let's take a look of how I'm doing as a option seller, right? Okay, looking at what you can make as an option seller. This is my results from last week, right? This is account one, right? I have two accounts. I have an LLC account and I have my individual account, right? So this is my individual account, right? So from the 8th to the 12th, 1 week span, we make, let's call it $5,000. I've made a lot more than this, but of course there's fees. So take home $5,000, right? Let's go to account two. Account two, the same dates, June 8th to June 12th, we made around $5,000, right? Give or take, right? A lot more than that, but fees, of course. So $10,000 week, right? And honestly, I'm doing that pretty consistently every week. So as we can say, right? If I go to now, this is not fake, right? Let's do that. Boom, right? This is just like literally from today, right? 8 to the 15th, right? So this, of course, today was just one trading day, right? If we just look at one trading day on this account, I guarantee it's going to be near 1,000. Boom. 26 of May. It's actually June. Boom. Bada boom. See, today we did $1,000 on this account. Then of course we did another 1,000 on our LLC account. So boom, there you have it. Now that we see a profit of an option seller, right? I'm not the only one doing that. There's people making a lot more money than me. $10,000 a week is great, but there's a lot of people doing a lot better than me. Okay, now looking at our example, let's do this, right? We said we're going to buy a put at the 70 strike. So you get to pick your strike. We're going to see what that means. And we're going to pay $1.33 in premium. Whenever you see that, just multiply that by 100. And that's actually the total amount of money you'll be paying. So 133 in total. So let's go do step one, right? Boom. We go to Uber, type in Uber here in Robinhood. Like I said, I don't use Robinhood, but I'm just doing this for beginners, right? It's probably the easiest beginner platform. So go to trade options. Right? The first thing you do is pick your expiration, how the longest thing you can hold it, right? If somebody pays you insurance money, what is your lease term, right? How long are you keeping them insured? Today we're going to say 25 days. You can pick any day. Then we're going to, of course, select put. Boom. So we're buying a put, like we said, and this is our 70 strike for $1.33 or $133, right? So boom, we bought our put, right? So we bought our put. This is when you're buying, right? I don't really like buying stuff, but we're quickly gonna go over what buying means. So whenever you buy a put, if the stock falls, you make money. That's all you need to know. If the stock falls, you make money, right? Maximum gain, technically unlimited. Maximum loss, the premium paid. This is kind of wrong. The maximum gain is the stock goes to zero, but sure, we're going to say limited. So let's say since the stock is at 72, let's say it drops to 70, right? We're going to make 60 bucks. And just like I said, we're keeping the video really easy. Since this has a delta of 30, if it drops $2, it's going to be 60 bucks. But like I said, this is just going to be quick and easy. On my next videos, I'll really get what that means, right? So boom. If it drops to $70 from 72, we make 60 bucks. If it stays above 70, it expires worthless and we lose the whole premium. That's when you buy puts, right? It needs to drop to your strike price, right? So in conclusion, right? What do you do when you buy a put? It protects you against the stock drops, right? If you own the stock and you buy a put, right, you can be protected. Or if you're just trading, if you think it's going to fall, right here, if you think it's going to fall, you can make money if it falls. Use it when you're bearish, right? Okay, my favorite strategy of all, right? The only strategy I would recommend for beginners, if you're going to choose one, right? Selling or put. This is it right here, right? What is selling put, right? What is selling a put, right? It's collecting premium to take on a risk, right? So if I can make this simple, you choose a strike, right? And what is a strike? These are all strikes, right? 72, 71, 70. These are all strike prices. You pick basically where you want to buy the stock. If Uber's trading at 72, you can say, okay, I want to buy this at 65, and you can choose that strike. Whatever strike that you choose, that's the risk you're willing to take, and you're getting paid for it, right? But for this example, let's say Uber's trading at 72, which it is, and you sell a 70 strike put, right? You're going to collect $133, right? When you're buying a put, you're going to pay $133. When you sell a put, you're going to keep the $130. That's your profit, right? And all it has to do is stay above 70, right? I'm going to look at my charts right here because Robinhood doesn't have the best charts, right? So all it has to do really, right? All it has to do, we're 70 right there. It has to stay above 70 right here. So right now it's trading at 72 right here, right? So 72. When we bought it, remember when we bought it put, if it did not go to 70, we lost money. When we sell a put, it can go down, right? It can go to 71, chill out here, right? Then it can go up, then it can go down. You're still going to make money, right? If you buy a put, you're not going to make money if it goes down. But if you sell a put, it can literally do anything, go down, go up, stay the same, and you make money. So like we said, as long as it's above 70, you keep the whole 133. If it drops below 70, right, you still keep the 133. So you're getting paid regardless, and you buy the shares. You have to buy 100 shares at $70. That's the risk you're willing to take, right? There's no free lunch, right? You're taking on risk. You're saying, where would I want to take the stock? And you only do this on stocks you want to own, not random stocks. Don't go buy Lululemon and be like, oh my God, this is the best stock ever. You only do this on companies you want to earn, right? If you shop at Lululemon and you love the company, you believe in it, go sell some puts in Lululemon on the price you want, right? For Uber, if you say, Sid, I don't want to take Uber at $70. I would rather take it at $60. Well, let's go here. Sell. Well, I'll start from the beginning for you guys, right? If we're going to sell a put on Uber on Robinhood, we'll type in Uber, trade options. Like we said, today we're going to go to 25 days. That's just the max you can hold it. You can pick any expiration, 11 days, 17 days, We're just going to do 17. For now, we're going to do 25 days, right? We're going to press sell because we're selling puts. Then we're going to, again, press puts because we're doing puts, right? And if you want it at $60, or that's really no bid there, but if you want it at $65, you're going to get $27 for that, right? So looking at this chart, right? Looking at the chart, we'll be like, all right, we want Uber at 65, like we said, and we're going to receive $27 for it. You basically got $27 to take on the stock at 65, right? About right here. So it can do this, boop, 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 and do nothing and go back up. You're still making $27, right? Or if it goes down and expires down here after 25 days, is somewhere down here, you're still going to keep your $27, but you're going to have to take on the stock 100 shares. So boom. So why sell a put? We're going to earn income. Go to any stock that you want, right? Sell deep out of the money puts, which of course, this is out the money. So if something's 72, $62 is out the money because it's lower than 72. Anything lower than this price it is for puts, that's out the money. So when you're selling these deep out the money puts, you're receiving money on something that probably won't happen, right? Let's say Uber is your house, right? This is a house and you're the insurance company. Mr. John is just paying you rent just if Uber drops. What if it never drops? You're just collecting all this money, right? $157, $200, $89. You're collecting all this money per week for free. This is the best strategy you can do. And then when you have a lot of money, you can go to somewhere like Tesla, right? Trade Tesla options. Again, we're going to go 25 days. Sell puts. Tesla's trading at 4 or 5, so anything below 4 or 5 is out the money. And we can say, all right, Sid, I'll take Tesla at 360, and you receive $300 for it, right? $300 for that. So I sell a lot of puts on a lot of stocks, and that's how I'm able to make decent amount of money, I would say. Okay, but like we said, right? Why do we sell a put? To earn income. Right? Week by week, we're looking at stocks we want to buy and we're going to sell our puts, right? Or to earn income and buy the stocks you want lower. Or you don't even have to do any of that. And you just think a stock is going up. You could just sell a put, and if it goes up, you make money. Maximum gain, right? If you collect 133, that's your maximum gain. If it goes up, you want it to go up, but if it goes up, that's the max you're going to make, right? Max risk, right? If the stock crashes to zero, you're on the hook for whatever you bought it at, right? So, boom. But yeah, these are key takeaways. Like we said, selling a put, you're going to collect premium, right? On the stocks you want. Buying a put, you're paying the premium, right? Basically, like we said, insurance, right? You're the tenant, you're Mr. John paying the insurance companies, right? While he's collecting your money every single week, right? Be this guy, don't be this guy. Both are really good, right? Selling, if you own the stock, you can buy a put and just really protect yourself. Or if you don't own the stock and you want to, just do it for income like I do. So, boom. Thanks for watching, guys. I hope you guys learned a lot. I'm trying to really make this beginner friendly. I'm going to try to make these a couple times a week. Thank you for watching. Please like and share and comment. Let me know what I can do better. Let me know mistakes I'm making when things are not clear, and I can fix all that. So, like I said, honestly, I'm gonna make a community, probably a Discord, a text. I don't know. I'm gonna make something where everybody can come in for free, right? Not gonna charge anything. Where people can come in. I can post my trades in there. Maybe I won't because I really want you guys to learn. But I'll post stuff in there. I'll have live chats, but maybe you can get in there if you subscribe. How about that? You subscribe. That's better than paying me, honestly. You share it. You have people follow me. So do that, and I'd love you. I don't know if I have my dog in my frame, but me and my dog Nova, probably can't see her, but me and my dog Nova will see you next time. Thank you for watching. Make sure you like and subscribe. Let's go.